I think I'm getting real close to where I can predict the price of a stock in the future, particularly if you get beyond a year, 2 years, 3 years. In fact, I'm willing to go out and say on December the 31st of 2026, NVIDIA will be at $2,345 and Microsoft will be at $575. Now, how do I do that? I do that because I have access to data. Well, that isn't going to work. That doesn't work that way. Well, I would ask you, 100 years ago, how did they predict the weather? If you were 100 years ago, what would that be? 1923. How would you predict the weather? Well, you'd probably walk outside and look around, and you might call somebody who lives west of you and say, what's the weather and what's coming our way? But that's about all you had. But today, weathermen have tools, they have data, they have past history. They can read what's happening in California so that they can predict what's going to happen in Denver. That's access to data. Well, the same thing is happening on the stock market. I was talking to a guy my age whose father used to work for one of the major brokerages, and we were talking about the ticker symbol, the ticker tape that people used to look at. And as far as filings with the SEC, the only people who had access to the filings of the SEC were the people who went to the SEC and said, can I see the filings? The same thing at the patent office. Companies didn't have websites. If you wanted to know what was going on in that company, you asked for a copy of the annual report. And once a year, they would send you a copy of the annual report. You would read it and make a decision. Is this a good company? That's not the way it works now. Hell, if I want to know what's going on in a company, I go to their website. I go to their press releases. I go to their filings. I get all of that on Seeking Alpha. So I can predict or I can gather the data. Then I have to learn how to analyze the data. Again, I could put all the weather data in front of you and you wouldn't know what it is. But if you learn what it is, if you learn in investing, if you learn to read a financial statement, if you sit in on their earnings calls, and then if you have the past history, like in weather, the past history, we know it's going to get cold in winter because it does every winter. We know it's going to get warm in the summer because the history tells us that. Well, we can look at the companies that we want to invest in. I have 37 of them. They're all involved in semiconductors and artificial intelligence. I can look at the last 25 years of their history, of their finances and their price history, and I can come up with an average, a 5-year average, a 10-year average, and a 20-year average. Is past performance any indication of future growth? No, but it does tell you if they have some consistency and how they react to other companies and other situations that happen at the time. And so you can learn from that, and then you can actually go to the data and learn what are they projecting the growth of their company over the next 5 years. Yeah, they'll tell you what they expect their earnings to be and how do you determine the value of a company? You base it on its future ability to generate profits. Okay, if it isn't going to make profits and it's going to lose money, it's pretty obvious that the price is going to go down. But if in fact they tell you that the earnings are going to grow by 20% this year and 18% next year and 30% the following year, well, you've got a pretty good idea then what's going to happen to the price. Well, yeah, it does have to be factored in what their PE ratio is, and are they overvalued at that time? But you can learn the formulas that make those corrections, and that's what I've done. I've created a history on the 37 stocks that I want to buy, so I know what their 5-year average is over the last 20 years. I've created a Google Sheets where I analyze what is their earnings for the next 5 years projected to be, and then how does that relate to their PE ratio, so that I can then create a factor that says, okay, based on the increased earnings and their PE ratio, to factor that in, what is the price going to be on NVIDIA in December of 2026? Oh, it's going to be $2,345. Actually, that's kind of an average between what their history tells me and what their future earnings tell me. And Microsoft's going to be $575, and I've done it for all the other stocks. Now what I'm going to do is I'm going to steal the information from the New York brokers, the Wall Street, and find out what they're projecting the price is going to be. Then I'm going to have three prices. And basically what I'm going to come down to is which stocks do I want to invest in based on their current price and their future price, which one's going to give me the best profit. It's that simple. I mean, if the weatherman says it's going to rain and there's clouds in the sky, you better take an umbrella. Or if it's going to shine, go out and get a suntan. So this is how I evaluate stocks, and this is how I'm from the future going to be buying them. I'm not going to buy stocks that don't have a potential to grow. Will I buy some nonprofit stocks? Yeah, if I know who else is buying them and I know their business and I listen to their earnings call. Let me take you just for a minute to my computer, and I want to take you to my cheat sheet. My cheat sheet is now got three parts to it, and what it does is it helps me predict what stocks are going to give me the greatest return over the next 2-3 years based on past history, projections by Wall Street, and projections by their growth, and then an analysis. And then I plug all that into, are they in an industry that is going to grow? Semiconductors, artificial intelligence, I think so. And are they financially strong? Do they have the ability to endure any bad turn? Such as right now, the semiconductor section is down. It's depressed because you aren't buying electric cars, and I've told you this before, and telephones and toasters and refrigerators. You aren't doing it because of inflation and high interest rates. So we know that, but we then know that these stocks are depressed, but as EVs come back, I just heard a report that, Mustang is now the second largest electric vehicle in the United States, and then that the EV hybrid market is taking off because people are saying, I'm not ready to get involved in a totally electric dependent, but their cars, particularly Toyota, my friend just bought a new Lexus hybrid, beautiful automobile. We'll see. But with that, I want to take you to the computer, show you what I'm presenting to my tribe. That's the people who sign up for our Platinum program, and I give them access to my research, and then I tell them when I'm going to buy a stock and how many shares I'm going to buy in it and what percentage of my portfolio is going to be, because I really don't care what I own. I really don't. When we get all dolled up and go out to dinner and I put on my best suit, I don't wear a sign that says I own NVIDIA or I own Microsoft. I mean, it's not important. What's important is I make money. Let me show you my computer. This is our website, Best of Us Investors. You page down if you want to become a part of it. You come down here and you sign up probably for our Platinum group. Gives you access to everything, swing trading, as well as my portfolio and my cheat sheet, and that's what I'm going to show you now. Right now, if you go into the description, it's not $60, it's $30, and that's about to end. So if you want to get involved, now's the time to do it. So you go to Platinum Channel because you'll be a member. And then these are all the elements of the Platinum Channel. My portfolio, the swing trading program, the tutorials that we have on that, ETFs. But what I want to show you today is the my cheat sheet program. And when you get here, this is a video that will give you something of a tutorial. I need to update it because I've added so much to it in the last couple of weeks. This is the 37 stocks that I have that are all directed towards artificial intelligence and the future world coming to us relative to semiconductors. As you can see, it's Apple, Amazon, Google, Microsoft, NVIDIA, all the regulars. And then down here are the software companies, Adobe, Salesforce, Modine, Palo Alto Networks, Snow. And what I've done here is I give you a current price. And this part of the cheat sheet is basically helping me, and this is all done to help me determine what price I want to buy into these stocks. There's some I want to own more, and what I'm trying to figure out is if I buy them at today's price, what is my potential return going to be? And such as an Apple, if I buy it at 169, I believe I'm going to make 19% on it over the next 12 months. On the other hand, if I can get it for 169, which is its support level, which I think it will come to, I can move that up to 22%. And you can see I do that on every stock. And some stocks it makes a pretty sizable difference. Here's Google to take a look at. Currently selling for 156. Whereas if I buy it at my target price of 130, I'll make about 57%. So 30 or 57. Then what I do is I keep track of their earnings. This is their 23 earnings at 580, 681, 24, 20. That's a 17% increase. 25 is 785, and we go all the way out to 2027. This is important because to me, if they aren't increasing their earnings, their stock price isn't going to go down. So that's very important to me. Okay, this is the second part of my cheat sheet, and this is a historical performance. And what it's basically saying is that over the past, let's use Amazon as an example, in 1999, their price went up 42%, down 80, down 30, and you come all the way down here, and currently it's up 18% this year. Then I go in and I say, what is the 5-year average? What's the 10-year average? What's the 35-year average? I think this is important because this tells me they have consistency. I'm more interested in the short term than the long term, but I go through all of the stocks that I hold, and as you can see here, some of them, these are software stocks. These are big tech. This is internet. This is this is semiconductor. This is semiconductor support. And this is semiconductor, basically construction. Those people who make the equipment, such as Taiwan Semiconductor, ASML, Supermicro, Vertiv, Modine. This is Fix, and that's Embotics. And so I show you they are consistent. I also show you that when bad times hit, they basically hit everybody. Okay, that's 2022. This is up here in the dot-com bubble. So, but what's really important to me is what is their average and what is their current 2024. And what is the 5, 10, and 15-year average? What I've then done is said, okay, this takes me through 2024. If they maintain this average in 25 and 26, what's the stock price going to be? Okay, this is their current stock price. If Palantir maintains a 30% growth factor, in 25 it's going to be worth $29.56, in 26 it'll be $26.42. And I do that on every stock. So I can look at Amazon and say has averaged 25% over the past year. Currently, it's selling at 182. If it maintains that 25.5, it's going to be 228 the end of 25 and 275 at the end of 2026. And I do that on every one of my stocks. Some of them I don't have a 5-year, but I know that and I take that into consideration. Now, the latest edition that I put in is based on my premise that a stock doesn't make money unless it makes money. If they don't have earnings growth, they aren't going to make money. Their price is going to go down. And whenever Wall Street senses or is told we got a bad projection for the next quarter, the price of the stock goes down. I'm experiencing that with one of my favorite stocks, AEHR. It's down 53%. And that's because they told them that their earnings were going to be down 25% in 2024. And so the price went down. That makes sense. I also know a hell of a lot more about AEHR. So then what I do is I say, okay, and let's use AEHR as an example. Their earnings are down 19% thus far this year. They're projecting their earnings are going to go up 15.8% in 2025 and 261% in 2026. Why is that? They're very heavy into making testing equipment for EV and hybrid automobiles. So their total growth for the 2 years, 25 and 26, is going to be 276%. This is their current price. This is their current PE ratio. This is their PEG. That is, I divide their current price into their PE ratio, or the other way around, and that comes up with their PEG. Now, what that tells me is whatever price growth they take, I've got to discount it by 92%. Okay? Their 2025 price based on their PEG and their discount of that is going to, AEHR is going to be $13.40. Their PEG for 2026 is 10. The price on AEHR at the end of 2026 will be $48.37. Then I take that along with their 5-year average and put them together and compare that to their current price. And then at the end of 2026, I'll be up 427% on this stock, almost 428. So what I'm using is the information they feed me. I'm learning the tricks of the trade, if you will, as to how to discount their growth based on their PE ratio, and I can show you that. When their current PE ratio is 26, but when you get down here and you see somebody like SYM, who has a 281 PE ratio, you can't give full value. Micron, that's a good one. You can't give full value to that 1,000% growth that they're going to have with a PE ratio of 179. So you have to discount it. And that's what this calculation all does. And what it tells me is based on its growth, its price is going to be $1,830. That's pretty high. Based on its 5-year performance, it's going to be $187. Its current price is $127. So I'm really okay if I get it, if it's somewhere in between these two. The average of the two is I'll be up 794%. Now, the green boxes are all the ones that I own currently. I have some I still have to do some work on, but this is what I share with you. And I update it on a daily basis. I spent this whole morning figuring these formulas out, comparing these prices, updating my target price based on what actually happened today, so that what I want to give you is a place that you can go on a daily basis and say, what's happening in the market and how can I react to it? And I want you to start thinking, I do not care what stocks I own. What I care is where I can make money. And is it a strong company? Is it in an industry that is growing? Is it something that I can make money and better my life, my family's life, and those who follows me life? I think you can do that. I think you can predict the price of a stock as well as you can predict the price or the weather for next week or even next year, because summer always comes at summer. It doesn't show up in winter. So it's predictable. The more data you have, though, the more predictable it becomes. And that's what I want to help you do. And I only can do it if you will sign up, get on the bus, sign up for the Platinum, take the 50% discount for the next 90 days. And if I can't make you a buttload of money, tell me to go away. All right, I'm Kerry Grinkmeyer. I'm a retired financial advisor. Get on the bus.